All right, guys, back to work. Back to work. Hope you had a fantastic day out there. Boy, these markets, they keep going up and up and up ahead of Jerome Powell's speech tomorrow morning. The good news, though, is this. Now we're starting to see some ranges on the charts. And if you know my style of trading, you know I love range-bound markets. Ranges love to give us reversals, breakout pullbacks, fake-out breakouts. So there's plenty of ways to make money in range-bound markets. And I'm going to go over my favorite trades I'm tracking for tomorrow. That way you guys have a game plan to make some money on Wednesday. Now, before we jump in and get the party going tonight, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video. And if you like these lessons, if you enjoy these videos, do me a favor here tonight. Hit that like button for me. Give me a shout out down in the comment section. Thank you so much for tuning in, supporting the channel here tonight. But let's get ready for Wednesday, right? Wednesday is not going to trade itself after all. Where are the best trades setting up for Wednesday? Well, first, why don't we start off here tonight on the 60 minutes, as always. I got the Nasdaq and the triple Qs. I got the Emini and the SPY all loaded up in front of me here tonight. Remember, guys, I like to use the 60-minute time frames to plan my trades for the following day with a big picture look. And then later on in the video tonight, I'm going to drill down to some tick charts. Tick charts, faster time frame, right? Lower time frame tick charts are going to make it easier to plan the entry timing for tomorrow. So we'll start off first on the 60-minute. We'll go big picture, and we'll drill down and talk entry tactics later on here as we go deeper into the video here tonight. What are the 60-minute charts telling us right now? Well, you can easily see we are very bullish here right now and just way, way, way high up. We know right now the buyers are still waiting for that two-legged pullback and a retest of the highs. We're all bullish here right now. You don't need me to tell you that, do you? And everyone's looking for pullbacks here right now. I really think the biggest clues to finding the best entries are going to be in the tick charts tonight, because that's when we start seeing some of the big ranges on the charts here. Before we dive into those tick charts, though, and talk about entry tactics, let's double check the schedule for tomorrow, because there's one very important event that you want to be aware of. It's Powell tomorrow at 9:15 Eastern Time. This is not his testimony. This is simply him. I believe it's a keynote speech or a roundtable discussion, something like that. It doesn't matter. But, you know, whenever the head of the Fed, whenever Powell speaks, the markets do tend to listen. So just be aware of that. Things may be slow ahead of the speech tomorrow, and things might be pretty wild around the speech tomorrow. I'm hoping that tomorrow morning in our trade room by about 9:45, the markets will have calmed down a bit and give us that nice sweet spot between 9:45 and 11 o'clock tomorrow morning. So that is the only thing on our radar tomorrow. I wouldn't worry about really anything else that we know about right now. We'll keep our eyes and ears open for any unexpected headlines that may hit the news wires. But back to our charts, though. It's good to know when the speech is tomorrow, but the money is made on the charts. You guys know that, right? Let's dive in now and talk about my favorite trades here for tomorrow. We'll go the Emini and the SPY first. We'll finish up tonight on the Nasdaq and the triple Qs. These are very similar charts, though, right? So pretty much everything is interchangeable here between the S&P and the Nasdaq. Like I mentioned earlier, we are bullish with a capital bullish right now. Everybody looking for that deep two-legged pullback and that retest of the high. I think the biggest clues, though, tonight are on the tick charts. Tick charts are going to make it a lot easier for us to plan our entries here for tomorrow. This is a 7,000 tick chart in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA. Nothing fancy about that 21 EMA. Just 21 exponential moving average if you're watching for the first time right now. Really, there is one very important clue here on the tick charts, and that is this trading range. That is this bullish trading range. Whenever I see a bull market into a trading range, there are really two different types of setups or strategies I'm looking to trade. One would be a deep pullback and a bit of a bear trap off that low. I love, remember, ranges act like magnets, right? We talk about this a lot in our free video classes. If you guys are in our free video course right now, you know how much we love bullish markets into ranges, buy below the range. I love how this channel off that high lines up right there as well. That's one thing we're going to game plan. there are three, maybe four different ways to buy that pullback. All right. We're going to cover those details here in a second, right? So we'll talk about the details because there are a couple of variations of that tonight I want you guys ready for. The next one, of course, is a breakout pullback, right? A breakout pullback. Oftentimes these bull ranges, they will rotate off the low and they'll break out, right, into what would be like a breakout pullback. And there's a lot of ways you can trade and make money off a breakout pullback. There are three, maybe four different variations I want to teach you guys tonight on that breakout pullback. All right. So kind of knowing those two scenarios, there are really kind of three game plans or three situations I want to be ready for tomorrow. And I'm going to bring you along with me here tonight on this video. The first one, of course, is that deep pullback. We'll talk about the 3-4 different variations. The second one, of course, is the breakout pullback, but you might not be aware of this. Also a fake out breakout, right? Remember, ranges are magnets. I could easily see a fake out breakout off that high, and that is one more situation or variable I want to game plan here for tonight. Now, it looks like right now we're trying to rotate off this low. So why don't we talk about the market going higher here first? We'll cover the breakout pullback, we'll cover the fake out breakout, and later on tonight we'll talk about some of my favorite trades on the Nasdaq and the S&P here on that deep pullback. I got a bunch of ways for you guys to make money on that deeper pullback. So let's talk about here now that breakout pullback. We are looking for that breakout going higher. Ultimately, there is a key level of resistance overhead at 44.23 and a quarter. You can easily see this on the 60-minute time frame. It's a big old high from earlier on this summer. So during that breakout, we have to think that that's ultimately where the buyers want to get to. There's a similar spot in the Nasdaq. We'll talk about that in a moment. Now, if we begin to accelerate running higher, my biggest concern is I don't want to buy high. So if we understand the idea of a breakout pullback on this, right, I'm going to be looking for what I call a bear trap as we go higher. You guys know this if you're taking my free video classes right now. A bear trap is very, very simple. It's a strong run higher, a higher high in price, and we call a bear trap or a trap right below that low. Strong move, right? Strong move, higher high in price, and a trap below that low, just like I teach it in the free video series. Okay, now, usually these breakouts are going to complete a measured move. The first leg is the measuring leg. The second leg is symmetrical, right? Measured moves. We talk about that a lot as well in the video course. Now, once we take out that measured move going higher, I don't want to buy up here, right? And probably nobody else wants to buy up there. But if we can get some rookies coming in and get these rookies to chase this thing and try a couple times up here, I'd like to look for what I call a crown reversal pattern to anticipate that pullback. Now, look at how I draw this pattern. I get a lot of questions about this, right, from new students. Remember, it's a lower low in price and a trap above that high. It's almost the exact same pattern as the bear trap going higher. The bear trap's a higher high in price, trap low. This is a lower low in price and a trap above that high. We have to get that trap above that high because we're so bullish right now. I want to make sure I'm selling as high as I can. Now, one of my favorite parts about ranges is that when they break out, they love to come back and use what was resistance as support. So once we wind up pulling back now think about what's going to happen right now. If we get that nice deep pullback, that pullback will be very strong. It'll feel like a bear market, right? This is a 7,000 tick chart. We're not trading off a 7,000 tick chart tomorrow in our trade room, right? This on a faster time frame on a 1,500 tick chart, a 2,000 tick chart will feel very bearish, and hopefully it does, because my favorite trades here now is after that pullback, I like to look for what I call a failure pattern. 1 try for the bears, 2 try for the bears. Let's get those bears roped in. Let's get some rookies to try to short this thing back down again. Remember though, whenever we see a strong breakout like that, there's a good chance we're coming back and retesting that high. I would love to get what I call a failure into pullback combination on the way back up to retest that high. Okay, classic failure. deep pullback. We're not going to pick the bottom, right? If there's one thing you guys learn about my style of trading, we don't pick tops and bottoms. It's kind of a rookie mistake, right? Very difficult to pick tops and bottoms consistently over a long period of time. I would rather rope in some sellers. Let those bears try a couple times and then use my failure pattern to buy into their stops. And then as it makes its run back to retest that high, I'm looking for pullbacks off the moving average. So this is kind of the dance. This is the series of trades I look for whenever we have a bull market into a range going higher. It's that bear trap going up. It's that crown reversal on the pullback, all right? And it's that failure into pullback combination. I know that most of you guys already know this stuff, but listen, if you're watching for the first time right now, this might be a whole brand new language. You might be looking at this computer right now, the screen right now, going, what the heck is this guy talking about? Traps and crown reversals and failures and pullbacks? Okay, not to worry. I got you covered. I teach all these patterns, and I have hundreds of examples of these setups inside of our free video classes. If you're one of the few folks watching right now who have not taken that free video course, I'll put a link up there for you in the upper right-hand corner. Grab that link and take that free trading course, because the strategy you'll learn in that short video series will teach you a stupidly simple trick we use in our morning trade room to know exactly where the best winning trades are going to be that day. Then once you know where to look for the winners, I'll teach you 4 of my favorite entry patterns to time the perfect entry and start making money on your own. These markets are way too good right now not to be making consistent money. If you're missing too many good trades, if you're taking too many losses, hit that link. Do your P&L a favor. Hit that link and grab that free video course. Perfect for someone trying to make a jump into full-time trading. And also keep in mind too, right? If you can't get that link up there, I'm going to put all the important links tonight in the description of the video. I'll put the free course links down there, our trade room membership links. I'll also put my Twitter feed down there as well. I'm always posting updates throughout the day on Twitter. So check it out down there in the description. So that is the scenario, right? It's that pop up strong, that bear trap, that run up into resistance, crown reversal, deep pullback. Trap those bears in, get them underneath the 21 moving average. Bears come in, they're chasing it, run those stops with that failure into pullback combination. All right? Now, that's kind of the goal. We might get all 3 of those. We might get only 1 or 2 of them, but at least now you know what I'm looking for tomorrow, and you can look for them as well, hopefully sometime soon in our morning trade room. Now, let's talk about some variations of this, all right? Because the markets are always throwing us curveballs. Now, remember, later on in the video, I'm going to talk about this move going lower, because that's kind of the dream scenario. You know, that's the dreams. And wait till you see the Nasdaq. The Nasdaq is the dream scenario for the move going lower. I'm going to make you wait for that one later on in the video. So get comfortable. There's more coming here. Now, sometimes what happens is we'll see a breakout, and it will break out and begin to grind and grind and grind. Okay, these are very common. We call these pop and grinds. And no, they're not our favorite dance move, although they probably could be. I'm kidding with you. Whenever we see it pop up and grind, we have kind of an ongoing joke in our trade room. The pop and grinds are our favorite dance move. But what you can do is you can mark a trend line off that high, okay, bring it all the way down to that low and find that new channel. Okay, now what do we always say in the video course? Look left, right? Look left and find prior swings. This is almost always where the best entries are going to be. Now, this could be a trap entry, like I'm showing you right here. It could be underneath the 21 moving average for a failure into pullback combination. Again, I'm simply drawing on the screen right now, right? But there'll be a lot of examples of these inside the free video course, right? So failure, pullback. Now, whenever it comes to a pop and grind, what's cool about pop and grinds is that the pop leg, right? That breakout leg is the measuring leg. Okay, so the size of that pop leg, once we know how far that pullback is, that will then give us the measuring leg. All right, I'm always telling my students in our trade room and our video classes, if you want to make more money, don't trade more often. Just get better at squeezing more profit out of the trades that you do take, right? If you want to make more money, trade a bigger position size, get better at letting runners run and work for you. Don't dilute yourself by trading more patterns or more markets. That's kind of the key, the holy grail of trading, right? So by knowing what that pop is, that will give you that target up overhead. All right, makes sense on this? Okay, so that's a variation. I just want to make sure that you know how to look for the pop and grind, right? If you want to dance to it, by all means, go ahead and dance to it. I love it. I probably could dance to it while we're trading those in the trade room. Now, one more thing here. The second scenario I talked about earlier was the fake out breakout, right? Now, how would I trade a fake out breakout? Well, what's the problem? The problem is momentum, right? You get a lot of bullish momentum. So if I'm going to try to short this back down again, I need something to fuel the move going lower, right? For example, later on in the video, I'm going to talk about if we go lower. If I go lower, we have all of this bullish momentum on our side, right? Any pullback, any deep pullback right now will likely be seen as a buying opportunity. So if I go lower, I have all of that momentum at my back. I can be a lot more aggressive on that trade. As I go higher, if I try to short this thing right now, I have all that momentum against me right now. So I need to counterbalance that. If not really more, I have to overcome that challenge. And this is exactly where those crown reversal patterns are necessary. They're required because we're going to have to trap in some buyers and use their stops to fuel this going lower. So one more time here, if we take out, for example, this range right here, I mark up the amount below the range, project above the range. That will be kind of our key level here up around this area here for tomorrow. So if we end up rolling higher, but now we can't quite crack that pendulum swing, as we call it. And if we start seeing buyers come in and try once to keep it going. Remember, buyers want to buy low. They want to buy at the lowest possible price. So as they go lower, buyers come in again, and we'll see if try again. If the buyers come in and try once, try twice, now they may end up blasting right through after 2 tries. But if we start seeing this little bull trap above the high, followed by a nice juicy red candle closing underneath, convincingly underneath that moving average, that creates that crown reversal. And the reason why this pattern works so well was we go up, buyers once, buyers twice, is all the buyers are now roped in, right? This one didn't go quite as far as I wanted to this afternoon, but that's okay, right? The 1-to-1 target gets hit. You're fine on that as long as you're selling nice and high, right? That's the key. That's the key. So basically, same pattern right here, right? Over here, we go up, right? We go up, rope those buyers in. We need those buyers trapped in to fuel that move down. And of course, in the free video course, we talk about trade management, right? The 1-to-1 first target, making sure we look left and find support. But that's the idea behind that fake out breakout, right? That fake out breakout. Now, if we're lucky, okay, if we're lucky on this, we'll go up, buyers once, buyers twice, we'll get that crown reversal. And when it punches lower, where do you think the bears want to go at that point? They want to take out that big low, right? They're going to measure the amount above the range, project that down here, and that becomes the big objective because you guys know this, right? Ranges love to rotate back and forth. So if we can get those buyers trapped in with that lower low in price, and that trap above that high, then if we can roll over at that point now, the name of the game are bull traps, right? Bull traps. We talk about this a lot in these videos. Whenever we have a trading range, right, it's failure patterns or reversal patterns and traps as it rotates. Okay, so that's another part of the game plan I'm watching here for tomorrow, right? And again, it'll probably be somewhere up around that pendulum. All right. Now again, crown reversal into that lower low in price and that bull trap. Bull traps, the name of the game. If you want to go against the trend at this point, take out that low. Now, what do we do down here? Okay, what are we doing here? Can we buy down here? Hell yeah, we can. Absolutely. That's where you have to think the most amount of buyers are going to be waiting here for tomorrow. Let's talk about that. Let's talk about that because I was hoping we'd get to this point. I've been neglecting the Nasdaq here all evening. Let's go to the NASDAQ right now, and I think you'll see why I saved this stuff for the NQ. So NASDAQ right now, we're pretty bullish, right? We're definitely bullish. The NASDAQ, like the S&P, has a key level of resistance overhead. You'll see a similar spot like this on the E-mini. On the NASDAQ, 15,468. So we have to think that is our next kind of big objective, if you will. The real secret, though, is here on the tick charts. Now, on the NASDAQ, if you were paying attention during the last chart, look what we have right now. We have the tail of two ranges. We have a range right here and a range right here. Now, let's think about this, okay? Ranges, right? The most recent range acts like a magnet, okay? It's a bull market into a trading range. A previous range, remind me again, what does a range love to do after it breaks out? It loves to make a measured move, and it loves to break out pullback. So this is very, very exciting chart to look at here in the NASDAQ, right? Because you can easily see what was resistance, right, could easily be used here for that breakout pullback zone. This is why I said earlier the NASDAQ is kind of primed and ready for that. And in all reality, because the NASDAQ is so high up right now, it would be welcome to get a really big pullback here just to give us some meat on the bone for these buyers. You can also see, too, we've got that channel off the high, off of that low. It's just the whole area just lines up beautiful for us here for tomorrow. So we covered the move going higher, right? We covered the move going higher, the trap, the move up, the crown reversal, the breakout pullback, right? We talked about that on the S&P and the SPY. That game plan is still in play. We mentioned the bull trap, crown reversal, the bull trap going lower, right? We talked about that already. Okay, so that's all the same stuff. Now, let's talk about pullbacks, okay? The ideal scenario. Okay, we'll talk about the ideal scenario, and then we'll talk about the reality, right? We might get here tomorrow, right? We want the ideal, but we plan for the worst as well. So the ideal scenario is that deep pullback, right? That deep pullback. But I had a bunch of students this afternoon saying, wait a second, Joe, is that a strong run higher, a shallow pullback, and a higher high in price? Is this but you're exactly right, it is. That could easily be a bear trap underneath that low. These are very, very common patterns in a bull market. Strong move, higher high in price, right? That bear trap. So I do want to prepare for a very shallow pullback. So if all I get is a shallow pullback right now, in other words, right, we don't get that nice deep breakout pullback that we're all kind of drooling over here on the chart this evening. So all we get is a shallow pullback. What is my concern about a shallow pullback? You know this. You know this already. We don't want to buy too high, right? We're concerned that after that big meteoric run, that bullish binge we've gone on since last Wednesday's FOMC, we're concerned that a shallow pullback may fail, right? It may fail and keep going lower. So I need to plan for that. I need to plan that as we get that shallow pullback. I'm going to try my best to rope in some sellers and look for a bear trap to get in. This is my way of kind of hedging my bet on a shallow pullback. In other words, I'm going to want to see the bears come in a couple times and to buy as low as I possibly can. Okay? In my trade room, we always say shallow pullback traps, right? Shallow pullback traps. And it makes sense, right? I want to buy as low as I possibly can on a shallow pullback because the risk-reward ratio isn't there, right? I want to buy that bear trap, that higher high in price and that trap below that low, all right? Now, what's the best scenario? The best scenario is that really, really deep pullback. Now, when that happens, we also have a bit of not a challenge, but remember, when I see a really deep pullback like this, that the strength of that move is going to want to retest this low. All right? It's very important to understand that whenever we see a strong move in one direction, it's a very good chance we're going to retest, in this case, that high. Okay, it's part of the rules we follow, kind of price action rules in trading overall, right? So if I see a really deep pullback right now, I love the idea of buying that deep pullback, But the challenge is all of that momentum could easily roll up and and run back lower and retest that low. So what I'm looking for is to use what I would call a 2-try failure as we go lower. We start pulling back to the moving average. Let those bears come in and try to keep this thing going lower. I'm going to use that 2-try failure and try to rip that thing back higher. Now, usually what happens on these is we'll trap in some of the bears. It'll squeeze and run back up. And as we're squeezing back higher, I'm going to try to buy as low as I can with a bear trap. You guys are experts on this pattern by now, right? So think about this one, right? We roll lower. We take out some of the big time support. It's such a deep pullback, though, that all that momentum is likely going to try to retest that low. So I need to counterbalance all that momentum. Use the bears against them, right? Let them dig their own grave there and buy right into those stops with a failure pattern. Then if we pop up well, and we can get through this little area right there, right? Pop up, higher high in price. That bear trap is the next best entry to add to your position, or for some reason to have the guts to buy that deep pullback, that could be your initial entry on your way back up to take out those highs. Now, think about this variation. Sometimes we get that deep pullback. They hold the underbelly of that range because, again, ranges love to break out pullback. We hold and we retest that low. This is even better, all right? This is even better because what happens in these situations is you got bears coming in and trying to short the underbelly. It's a breakout pullback. The sellers who short that pullback, where are they taking their profit? The majority will come off at that low. This is where everyone is a buyer. I will never forget when one of my first trading coaches, one of my first mentors, like a gajillion years ago, he would always say, Joe, think about scenarios where everyone is a buyer. This is a scenario where everyone becomes a buyer. Why do I say that? Well, because first of all, anyone who sold short, if they're smart in a bull market, they're taking the bulk of their profit off at that low, right? They're buying their way out of their short. Buyers are going to buy down here because that's what buyers do, right? Buyers come in and buy low. They buy double bottoms. The trick now is now what to do is get that 21 EMA come in, get those rookies coming in, right? You know me, I'm not a big fan of simply buying support. I like to wait until I see, in this case, the bears try a couple times. And once they do, what happens if you are stuck short right at that low when you get stopped out? You become, a buyer. Again, buyers are buying low already, right? The sellers who sold up here, they're buying their way out. They're covering their shorts at that low, right? And then speaking of shorts, right? The rookies are getting their shorts lit on fire, right? As they get stopped out and run back up. These types of trades are one of my favorites. We call these double bottom reversals. Take half off profit, right? Or at least I'll be doing that, right? Take half off at that swing, leave that runner to go back up and retest that high, okay? One more variation of this, all right? One more variation, and we'll wrap it up here for tonight. Again, we know the shallow pullback. We know to do that one. If we get that big move down, this may be the healthiest pullback we've seen all week this week, so it may get whacked right back up again. These are my least favorite, so hopefully we don't get this tomorrow, but at least if we do, you're ready for it, okay? What'll happen is again, we want to get those bears once, bears twice, and buy nice and low, right? When I have a small risk and a big amount of reward, okay? That's where professionals trade. They trade with small risk and big reward. That's what makes them professionals. If the market goes higher like this and begins to V bottom basically, right? Now the problem is I can no longer, right? If it bounces hard off that low, bears try once, bears try twice. Promise me, do not trade way up here. Okay, we do not want to buy up there. Why? Think about this. Okay, we know that move down wants to retest that low, right? It wants to. It may not, but it wants to. Where's my risk? My risk is right here. Where's reward? It ain't good enough, right? Look at that risk-reward ratio. You're not going to make money long-term trading like that, right? You're trading with rookies up there. Those are not what professionals are going to be. Professionals are already in, or they're waiting for what? They're waiting for that bear trap. Now, look at what happens when you wait for a bear trap entry. Now, what's your risk? Your risk is right here. Now, what's your reward? Your reward is right here. That small, that little bit of patience, All right. And guys, I will gladly miss that trade if I can't get that entry. Okay. That little adjustment puts you in line with the smart money, because oftentimes what happens is, and I don't want to go too far down the rabbit hole. Oftentimes what happens though is you'll get in right here, right? You'll buy going back up right here. And when you're getting in right there, what happens is the market shoots lower. Your stop, of course, is tight, because I assume if you're unaware of that rule, you're probably unaware of where your stop needs to be at the same time. And right when you get stopped out is right when that thing rips higher. This is why you don't buy high when it puts you in a poor risk-reward ratio, because it's going to want to pull back against you. And when it pulls back against you, the shallowest of pullbacks will stop you out, and that's usually where the professionals are getting in. So if we V-bottom off that low, don't let that lizard brain of ours talk you into chasing it going higher. I know it's difficult, but now you get a game plan here for tomorrow. All right, guys? So buy that bear trap. Remember, think about that risk-reward ratio and make sure you filter that for your trades here for tomorrow. All right, guys? Now we have the game plan all ready to go. Like I mentioned earlier, it doesn't make any sense to make predictions. We game plan different scenarios. That way tomorrow morning in our morning trade room, we have the game plan ready to go. And tomorrow, that Powell, he's going to throw some curveballs at us. Something's going to happen tonight or tomorrow. I wasn't expecting here tonight. That's okay though. Tomorrow morning, we'll get together 8 o'clock Eastern time, and we'll update our charts, and we'll trade whatever the market throws at us. Like I mentioned earlier, I'll put all of the important links here. I'll put the free video course links, the trade room membership links, the Twitter feed stuff down, the description there. I would definitely recommend start with the free video classes first, learn the basic strategy. That'll get you warmed up, and that way you can sit down sometime soon and start kicking butt with us in the morning trade room. We open up tomorrow morning at 8 o'clock Eastern time. Any questions, any difficulty getting access to our video classes, don't be a stranger. You can always call or email or use live chat. We're always here hanging out in the office here and answering questions. So don't be afraid to call or email or use live chat if you're having trouble getting access to the free video course or any questions about membership or anything along the way. All right, guys, hope you learned a bunch in tonight's video. If this helps you, let me know in the comment section below. Make sure you subscribe so you don't miss tomorrow night's video, and hopefully I'll see you sometime soon in the morning trade room trading right along with me. In the meantime, be well, be nice to each other, get some sleep. We're still catching up on the daylight savings time shift. Either way, I'll see you guys tomorrow morning. If not tomorrow, same time, same place tomorrow night. Be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.